Microphone check and screen share check, please. Okay, here we go. Thanks for your patience. Canada Tortoise Capital Nightly Strategy Podcast for August 9th, 2022. So we did the U.S. session for the Creativity 202 earlier tonight, just a few minutes ago. We finished up. We're on lesson 7 of 30, just starting phase 2 in the book. And I wanted to summarize my true story from that session. To get started tonight. So the lesson is about your brain's two kinds of smarts, the logic brain and the plotting or storytelling brain, the brain of flow. Angus Fletcher's exercises address and activate insights about emotional intelligence, Martin Gardner's theories of multiple intelligences. It connected me to the yin-yang relationship between formal analytical logic and the flow state of plotting and storytelling and artfulness. I rendered that down to facts and flow, and how the facts of a story or of a situation include things like the actors and the stage settings, but also sort of that dynamic energy of the plot that is involved in pulling everything together. And it reminded me in a meditation that was triggered of a river of plot that's carrying leaves of fact downstream, along with all the little fishies that are living in there. And the meditative state, stream of consciousness, sounds something like this, that the exercises, Fletcher's exercises and mine, my exercises are an effort to start from facts, go into a storytelling flow, creating mental theater, and then rendering the insights down into flashcards, into words of power, into triggers that allow me to activate the feelings, the insights, the moment, the attitude, the beliefs that I discovered on that journey. Things like the importance of the plan, do, check, act cycle of quality control, or the plan, prepare, execute, assess that we use. And it reminded me of the passing of seasons and a time to act, a time to reflect, and how storytelling in a trusted circle unleashes the hounds of creativity to discover new things. Birds will flush the prey and will trigger new ideas almost by surprise. And that the flashcards that we use to capture our notes and momentary insights become part of a story deck that is now part of our repertoire. In the same way that the individual modules and components of a system can be repurposed for other systems, and that taken together, you have a meta system with all your pieces and parts. The insight that when you have an individual trading system, you need a larger strategy that ties it together with all the other things that you're doing in order to make a genuine approach that is robust, and an understanding of why that system should work, which helps give you confidence. Like if you have a black box that produces numbers, it's hard to trust in that without some sense of the inner workings or the underlying reason why it should work. It can be unsettling. The idea finally of the braveness and courage it takes to tell your stories with trusted others as a way to unleash those inner surprises that come out through true stories. And so that little sketch for me happened during the Sunday morning session as I was listening to stories and preparing to tell my own story. That was the image that came to mind. And the inner journey sounded something like this, that I was triggered into a state of ebb and flow and a feeling of melancholy as I watched a leaf that had blown off a tree pass along in the stream, carried by that gurgling mountain stream, which I could see from my seated position by a fire, looking across at the dark forest with the hooting owls and the musty smells, the leaf being carried to the sea, perhaps, or wherever it would finally come to rest and become part of the landscape in the new place. And I was struck by the sense of the passing of time and the changing of seasons and of time and place and motion and rest, with facts everywhere and their logic, but the power and flow of plotting, tying those things together to make meaning. And all of this, as I felt the heat of the fire on one side and the chill of the night on the other, on my skin, furthest away from the fire. And I felt myself to be in exactly the right spot between heat and cold, night and day, yesterday, today, and tomorrow, surrendering to all of that, like that leaf in the stream. All right, so let's take a look at today. So yesterday we got to a peak with a new 30-day high that was testing the previous peak of the 30-day high, which when that could not get any higher, did this. A move from 418 to 363. That's a $55 move on 400. That's a minus 12% move. That happened 1, 2, 3, 4, 5 in 5 days. And it's taken us 35 days to get out of that hole back up to this moment. Now this feels like we're making leg 1, leg 2, leg 3, and that this is just a natural resting point on the Kata 2 journey to the top of the mountain. But at the same time, I'm also mindful of this and that we are in a bear normal and that this is a pretty long string of continuous success and that the slope statistic of those 30 days from here to here is exceptionally strong and starting to peak. So this would be a natural place for this to have a pullback, which is what we have now. But I'm going to really respect that PSAR and the bottom of the dragon, if I will. I'm not going to let it get past that. Like I'm not going to let it test the 10-day low or the 20 and 30-day low. And certainly not the 150-day low. Because we put a lot of work into pushing it up that high. So this is a relatively small 5-day range right here. This was a small 1-day range, compared to the 10-day. So this is a consolidation area, but the bottom of the dragon is the bottom of the dragon. And tomorrow the PSAR is going to be like right about there. So in my view, you either have to have a stop at 409, but not lower than 406. Your mileage may vary, but that's how I'm playing this thing. It has to get through this. Last time it was 10 days in here and then failed. We're about 5 or 8 days into this now, and it has not followed through. So at a moment of minimum volatility on the 1-day and the 5-day, but failure to follow through, it's fair to say what's going on here and to make sure that your stops are in place and that you are rigged for rough weather before it starts. The upside will take care of itself. So we're going to see in one of the trades from the team concerns about getting into positions given the size of the, bars. What I would say is the thing to really pay attention to is the PSAR. And in a trending move, it almost doesn't matter how big those bars are, as long as they are on your side of the PSAR and the dragon. That's okay. Let it be noisy over in there. As long as the primary trend is in your favor, that's going to be okay. Trust the PSAR. On the 30-day, or I'm sorry, 30-minute move, this is today's 30 minutes. So yesterday or Friday closed. No, I guess yesterday, Monday, closed here. Today was pure consolidation. The PSAR has come down here. It has failed to fail, like this piece of structure and this piece of structure, like we said yesterday, has held, but it's right on the edge. But this is the natural place you would expect it at least to get back to here in this channel. You would expect it to get to 416 uncontroversially, or 417, let's call it that. It takes a move above this structure here to get our attention as to potentially something new, and then a breakout above the previous peak of the RL10 to really get our attention. So this is the tactical trade in here. Tentative, opportunistic. This is where it starts becoming powerful. Let's call it 419 and above. The downside is easy to see, just like we talked about yesterday. This will all vaporize if it falls through 409. That moves quickly. Remember, bear normal after an extended recovery move in a bear market. Nothing to sneeze at there. All right, let's take a look at the sectors. So the S&P at minus 0.4. You got the Qs and IWM down here at minus 1.3. The best performer, let's see, we got DIA up here at 0.16. You got emerging markets and treasuries in here with the S&P at like minus 0.35. So, this is actually a pretty tight range of performance between the best index, the Dow, down 0.16, and the worst index, the Russell, minus 1.36. This is only 1.2%. So very tight compression today, as we saw in the daily. The underperformers, Wheaton, materials, wood, VIX, commercial real estate, lumber, tech, and the FANGs. Now we're picking up serious underperformance here with staples, clean energy at 2.7, blockchain, blended large cap, crypto, biotech, which has been strong, minus 3.3. That's a warning sign of profit taking from what's been a pretty good sector. Bitcoin, global future of finance, those disruptors, minus 4%. ARC Genomics, which is weaker than its corresponding benchmark here, ARC Genomics 5.5. ARC Innovation 5.54. That's also a sign of weakening. Coinbase and Ethereum, which have been very strong, now are largely large weakness today, minus 7.5 and 10.5. So the Coinbase volatility just continues to amaze. Robinhood weak, Squarespace weak, Tesla minus 2.44%. Closing right at 850, which is a crucial spot right between he had moved down to 650 the last rundown, and it had gotten as high as 950. So here he is right now in the middle of the round number at 850. Still closer to the top than the bottom, but it couldn't break through 950 and has rolled over and is back down here on weakness today at 2.5. So this is either a buy on dip opportunity or the beginning of the next couple phases down. So this still to me is primarily an intraday trader. I'm looking at that $5 R10 as my guide. So let's take a look at the upsides. So once again, we had the S&P here, our baseline at minus 0.4. You have marijuana, Aussie dollar, Mexico, diamonds, staples, oil at the break. And here's the cut line between real gains and losses. So staples basically flat. Now, lithium, Brazil, and agriculture, all marginal kind of minor wins. Finance and real estate, 0.5 and 0.6. Blended commodities, 0.8. Now strength in the energies, about the only thing sector-wise that was worth, 1.2 and 1.7. And now we have the clear winners. I mean, how nice is this? All four of my primaries were the top winners today. Alcoa 3.5, US Steel 3.3, Devon Energy 2.6, Cliff 2.4. Microsoft with a respectable 0.7. So that old school tech, along with Apple, outperforming both the tech sector and the broad market. So this is pretty thin gruel here. I mean, you got energy and finance and most everything else suffering. So this is a time to be ready for a sharp transition and protect the gains of the last 3 to 4 weeks. We'll shift to the daily report up next. And starting with the sniper trade of the day, let's get this a little larger so we can see him. Let's see, this one is US Steel. One click too many. There we go. So here was the close yesterday. Here was the opening range 3. It failed, it failed, it failed, and then finally broke out of that opening range 3. So I get short. It immediately reversed. So I took the minus 0.3 off the standard risk box. I waited to see the RL10 find support like a Kata 2 in here. And then when it broke above essentially the emerging dragon, I was ready to give that a try with the standard risk box. I was really risking about that much. I was not let it get below the PSAR. I think I stuck around too long on this one. That was the warning. I could have been out in here or in here, but I was giving it as much room as I could and still get no lose plus dinner for 2. That became a stop and reverse on the PSAR flip, standard risk box. That got paid. Here's the R10 wiggle. So that's about +1 right here. So I call this one a scratch. This is minus 0.3. This is a scratch. This is about +1, so we're at about 0.7. I get a COTA 2 here. Standard risk. I'm really only going to risk it to this level here at the PSAR. It's working in my favor. I held it. This was going to be one more bar, end up getting out shortly thereafter. That's about 0.3. So we're now up to 1.0. This is hard work. A low, a higher low. So we're still getting some COTA 2s. I wasn't enthusiastic about this one, but I had to get it here. And again, I'm risking about that much. And this one paid off. I missed the second chance here and here. This one on like an emerging dragon, and this one on that R10 wiggle. But I was just happy to finally get some traction. So this is 1 unit of risk. So that's about +2. So that's about +3. Once we finally got this thing going, and metals were the winner for the day. And this was U.S. Steel that looked the best. Okay, driving on to, let's see, dashboard number 1. Still bearish quiet. They'll sleep. You sure that bear is sleeping? What's he like when he wakes up? Hungry. So I am mindful of this. This is either going to be a nice buy on dip opportunity or the bear wakes up. We're still risk on, so the upside is still there. Volatility wise, we have not seen a return to volatility. Only Latin America is flashing a warning sign. Travelers, Goldman, that's finance. JP Morgan, American Express. It tells you something when 4 out of the 5 minimum pain symbols are in one of the strong sectors today, XLF. So finance is in play as tech took a back seat. Look, here's Intel, Tesla, took a back seat, and DIA was the other winner in the min pains. Even though energy was strong, ExxonMobil and Chevron still have a long way to go to the 10-day high, so we'll be mindful of that. The Dow 30, lots of dojis today. Not a surprise when you see that many, or when you see that narrow a range on the market's volatility. It's not unusual to see that many dojis. A lot of auto framers. So when the daily range is small, when that's compressed, then there's a lot of them back to the 10-day high. So Caterpillar, Chevron, Intel, which got smoked today and has just been as bad as can be, and had major breakdowns on every time frame from 10-day to 1 month, 3 month, and 6 months. A big breakdown in all of those. Godzilla, anyone? Johnson & Johnson, 3.3 to 1, Coke, 3 to 1, Pfizer, 4 to 1. So there are some targets of opportunity that are easy to believe in as value plays from their swing frame. So we'll be mindful of those. In the ETF tactical, just a handful of dojis. There was more volatility in the ETFs than in the US today. A handful of auto framers. The only breakout was to the upside in Latin America, briefly. But otherwise, a lot of just patiently waiting for leadership to emerge. You go first. No, after you. So that's what today was a consolidation day. And that leads to a lot of that compression of the range leads to an awful lot of better than 2-to-1 on the auto framer. So these are all the ones that are the furthest from their 10-day high. Intel is always of interest. Cat, Pfizer, ExxonMobil, Coke, and Walmart. Oil had a very strong day today, but is still far enough away from its 10-day high that it makes an interesting reward to risk. Yeah, tech at 2-to-1, energy at 2-to-1. So there's some, all of these XLF, XLE, and XLK all have reasons to be interested in the sectors, and each one of these have symbols that can be leveraged. So energy, it would be, I'd be looking at Devon. Tech, I'm looking at leveraged Qs, or Intel is intriguing to me. And then the conservative plays of Microsoft and Apple, which both had good days today. When tech was down, they were up. So it stands to reason that if tech can go up tomorrow, we would look to these two first to see if they're continuing their gains from today, or is this an opportunity to buy Intel on sale? At some point, they're going to benefit from a $50 billion government investment to rebuild the chip sector. How do you not love that? So I think Intel's becoming more interesting to me, Intel and NVIDIA. On the daily squeezes, this is what you need to know about today, was that the two top squeezes are diamonds and the S&P, tightly compressed, whereas Tesla and Brazil had relatively large range days. Other symbols of interest, tech, Pfizer, even treasuries are tightly compressed. There's finance and staples and energy. So just range compression as far as the eye can see. Tomorrow should be fireworks. That would surprise the most people, and surprise usually leads to pain and suffering. Shifting to sniper headquarters for targets. You can see that one a mile away. Intel, Newmont Mining, and Intel is stabilizing at the bottom of its sell-off. And Newmont Mining is nice and compressed as well. No Godzillas in our tactical symbol set, but Newmont and Intel on my short list for tomorrow and the days ahead. Lots of fireworks as more and more things settle down in the top end of their trading ranges, and most of them, like popcorn in the microwave, just waiting to explode with surprise, up or start to fail. Only 3 on that stack having exaggeratedly large 5-day moves, but even 2 out of those 3 are pretty quiet today. So this is a market that is poised on the edge of a knife, ready to explode. The fence sitters, including ExxonMobil, always of interest. Today was exceptionally quiet, no surprise there. So this is a market that's waiting to hear a pin drop. And you can see that in the quiet ones on the 5-day, not a single one of them had an exceptionally large day. In fact, only COO even had a slightly larger than normal move, and it wasn't much. That's quiet as far as the eye can see. On the most volatile ones, the ones that are already starting their move today would be of interest to me. These are like first movers, and would not be surprised to see a lot more volatility in PFG, NWS, NWSA, LRCX, Tech, STZ, Applied Materials in the chip sector. So I'm looking for those kinds of divergences. These three look really interesting to me as momentum plays. Worth a look. Tactical symbol set with its, performance stats for you for preparing your charts. The tactical symbol set sorted by 5-day volatility. It's telling that only 3 have had large moves. Biotech, which was weak today, and today was not a large range day, but it was a weak percentage-wise move. So I'm worried about biotech to the downside, or eager to play biotech to the downside. Brazil and Coinbase. So those are already moving and should be on your list. This is how bad Intel was compared to its peers. Apple has some longer term strength. Maybe the beginnings of some recovery here in energy. You got ExxonMobil and Chevron with breakouts, and Devon Energy was very strong today. And I love that in U.S. Steel. Strong. Latin America showing some strength. Utilities with consistent utilities saying, what's all the fuss about? I don't know. This is a market it's ready to break. Only energy it was showing any kind of strength today, as far as breakouts. We will shift to sniper trades. You've already seen this one in U.S. Steel. So just clear the deck. Alcoa in the metals. Again, find the movers. So I'm playing the OR3. The second bar was an inside bar. The third bar moved out, breaks above the open, or the highest high of the first bar. So I buy it. Standard risk. By the time it's up into this region, my stop should be up to at least something like that to lock in no lose plus dinner for 2. Open risk about 5 minutes, actually 3 minutes before it's a science project. Standard exit here. As it comes through the dragon, it holds. PSAR flips, buy it again, standard risk. It'll be interesting if it can get above here. It comes up in here and starts stalling. So I shouldn't be in that too much longer. Yep, scratch. Stop and reverse at the normal place. The rest of the market was weakening. So that is a scratch, stop and reverse. There's the standard risk box. There's your PSAR flip. It has to get below here to be a collapsing dragon, and now it would be interesting. And then if it can kind of get below, let's say here and here, then that's my target down to the bottom, right? Could not break through. So I take a 1, 2, 3 exit, and just happy to, happy to collect that. So 1 unit of reward, 1 unit of risk. That was a stop and reverse. Because I was feeling that. but it failed immediately. So I take that exit here for about minus 0.6. Letting it stabilize. And I couldn't get on that. I was trading US Steel, which was much more directional, and was happy to just focus on that one. There was so little volatility today that I just stayed with the ones that gave me any kind of movement. So this is Devon Energy. Energy was strong today. Here is the, let's see, zoom in on this a little more. Here's your OR3. It moves, it has higher lows, takes out the top, buy it, standard risk. Fails immediately. Actually not quite immediately, but sharply. It's grinding, and then breaks. So I just take that, can't stand it. Kata 2, as it crosses back above the RL10 and it's finding support. So just re-enter, standard risk. Standard exit. So capture this. You know, this one kind of pays for that one. So we're probably, you know, net even right now. Stop and reverse on weakness. Lucky. If this gets you out, then this has to get you back in. So you're not wrong to take that and capture that win and then re-enter down here. And then plenty of failure to follow through. If it was going to fail, it should fail here and get back to close the gap, but it didn't. So this now is a PSAR stop and reverse. I'm going to pick that as my execution. Scratch short. Scratch long. Standard exit. Man, this is a grind. You know, 0.5. So scratch, fractional gain. It just didn't have much follow through. So this one netted about, let's see, all that minus 0.7. This was about 0.5. So we're at minus 0.2. This one earns about 2. So we're at 1.8. Scratch, 0.5. So maybe 2 in Devon. Couldn't really get traction. Coinbase, the roller coaster. Here's the OR3 with a great big gap. So this one's going to be in play today. I tried the 1, 2, 3. It failed. It did not fail. So I play like the 1, 2, 3 with standard risk, hold my nose, hold my beer -1, stop and reverse, plus a half. I elected not to take the short, or to take the long, excuse me, because of clear. All right, that's a trap. Short, capturing a sliver. Still underwater on this one. Short, a sliver. So that's probably 0.3. This is about 0.2. This is -1. This is about 0.2. So net minus 0.3 so far. Nothing. Just could. I think it was down 10% today, and I couldn't get any traction on it. Stupid Coinbase. Needs to play ball. Here's oil on 3 minute. Here's your OR3. I buy the breakout and it fails back to scratch right away. Caught a 2. Fractional gain. Stop and reverse. Fractional gain. Take the next breakdown anyway. Collapsing dragon. Second position short. Third position short. So why are those legit? Well, because when this thing trends, it trends. This one, because you got the 2 little R10 wiggles. So this one had a gain and ticked me out and then broke down. So I get back in, and I like it because it's below all of this. There's just a little piece of support. This one, 1, 2, and dropping like a rock. And I want to get a second position on as it comes in to test this. So now I got my finger on the trigger. Are you going to fail? You're going to fail. Yes. Third position. Trusting the PSAR and exiting. Thank God. So this one is a 1 unit of reward. So we re-entered here. So that's about 1, 2, 3 on the first one, 2 on the second one, and 1 on the third one. So that's about 6. Save my bacon today. Bacon. Stop and reverse for about +1. And that was pretty good for today. It would be rare to see oil trading violently all day like that. It's not unusual to see that kind of. Look at the yin yang nature of this thing. Up 1, and if you add the gap, it's up 1, down 2, back up 1 to close right where it closed yesterday. So all that was just for traders, I guess, to take their shot. Let's take a look at the other traders. I want to highlight some work from Constantine. You need to study his charts. So he's got his first 50 trades in using only the sniper. He believes he needs to work on the continuation patterns and re-entries. His average winning performance declined a bit because his targets have been in more of a range. And so he's still learning to adapt to a new system. He does feel in sync, however, with the sniper trading approach, and he has stopped trading his old system. He used sniper trading to pass a proprietary firm account challenge, which now is going to give him access to institutional money to trade. And he's looking forward to the next 50 to 100. And he's going to look to add maybe a few stocks. He's also going to take the trades, the last 50 and 100, and drop it into Forex Tester 5 to start examining where continuation trades might be already part of his successful trading approach. And he's setting up a learning journal to start recording some of the insights that are coming from the analysis that he's doing on his trades. So that's where his posture is. Feels like a good work in progress and a craftsman approaching his craft. Let's see what his numbers are. That's how he feels about his trading. Professional, encouraging, measured, professional. If I haven't said that before, we'll say that again. Professional. Passing the prop test or prop trading firm test is part of that. Here's a couple of his trades from today. Doing his analysis on the morning, he sees the channel, the tighter channel. Notice how structure is a sign. Failure to fail here is information. Aha. Finds support, plays the PSAR break, gets long with a tight risk. There may have been a continuation here and here. And then he hit a round number and had 5R in hand, and he said, "Thank you very much. Let's bank 5." That's the gold spot versus the dollar on 2 minute. Later, the gold spot against the dollar, he sees the rising lows, but a double top and PSAR flip. He gives that a shot and collects 2.7 down to where it holds support. What used to be resistance is now support. So he trades that essentially return to the mean or return to resistance, 2.7. So that's 7.7 in his preferred target. You can also see this divergence down here, where you have a summer leading into the winter, and this divergence and this failure to follow through is much more prominently seen here. Notice the lower highs in the MACD signal line, and he gets it when it falls out of the Red River. That's pretty good shooting, Tex. And then it confirms with crossing the zero line into the winter, and his exit is as it enters the spring. So that is about as seasonal as you can get. That is just outstanding. Here's his performance over the last 7 days. 6 out of the 7 days have been favorable, 1 losing day out of 7. 43 winners, 7 losers. His average R multiple is 2. His sum of performance is 105 R. Expectancy per trade is 176. His average winner is 0.28% of price, average loser minus 1.1. It's important to know that's a 2.5 to 1 payoff ratio with a win rate of what, 4.5 to 5 to 1. That's a 5 to 1 win rate and a 2.5 to 1 payoff rate, an 11% return on capital in 7 days. Max drawdown, profit factor, pretty amazing. Nice Sharpe ratio and gain to pain. Sweet. That's how you do it, Tex. I like that he's got a program of improvement and study. Rather than enjoying that, he's working. Getting paid to learn. PSAR flip for less in the Euro US 5-minute. Measured shot, cash 1. Good scratch, out of the office. An R a day will keep the doctor away. Arch. Now here's the comment I was making before about trusting the PSAR. It's not the size of the bars as it is their relationship to the dragon, which acts as a buffer to the tripwire, which is the PSAR. So the larger bars are actually volatility in your direction until you get to the violation down here and the PSAR when that ends that whole segment. So if you look at this, I want you to note unit of risk, the PSAR box, maximum favorable excursion was down to about here. The give back was about 2 of those little flip boxes, right? And your gain was about 1, 2, 3, 4, 5. So risk 1, maximum favorable excursion of 7, and keep 5. How important are the size of the candles compared to the power of the PSAR to let you know? Now here, again, the size of the bars don't matter. It's the relationship to the PSAR. PSAR flip, trust this thing. Your exit would be up in here. So entry here, risk there. That would be about an extra 1 instead of minus 0.2 and minus 0.5. That's the difference between minus 0.7 and plus 1 is second guessing the PSAR. So start counting the expectancy of second guessing the PSAR. Yeah. I just use bars because I find the candles distracting. Here's the next PSAR flip. That should be our trade. Here's the PSAR flip. You crushed it and re-entered. So 1.5 and more room for gains and some lessons to study and reflect on. Trade smaller size until you trust the PSAR more. Luke with the 5-minute Aussie. Peak rolls over, crosses. There's your P1. Gets the breakdown below the spine of the river. Gets paid. This is about a 1, 2, 3.5. Gets paid. Continuation, trade, scratch. I mean, ideally, that's the trade. And it would scratch instead of a minus 0.1. We can live with that. The re-entry is more important. Crushed it. I don't mind, I guess, not taking this shot and waiting just for the PSAR to cross. But that costs an R. Here's the R10 wiggle, and that's where, if ever you were going to put a second one on here, which would then make you want to take a 1-2 exit at the edge of the dragon. But just with a single position on, that's pretty good work. Good scratch, good scratch. Take a look at what's causing you to wait the extra piece for the confirmation, and is the certainty, the feeling of certainty, more important than the numbers? Decide how important that is. But that's 2.8. Really nice work. And his study in the Creativity 202 course lesson, we're going to have to just, I think, get your story segments from that course into your course of coaching and self-development for trader learning. I think there's some important lessons that I want to talk with you about getting into a course. I think it's important to do that, because I thought your discussions in the creativity course were amazing, in the sense that they were good. I'm no longer amazed when you do such great work. All right, Arch. On Devon, he just like me, he tried the OR3 breakout. Good quick exit. I like waiting for the cross in the R10. That gives you a great trade here. I like the short here. This would be the exquisite short, but you'd have to suffer through that. Here's a case where waiting for the VWAP to fail gives you a really nice one. If you were ever going to put a second one in, it would be there, and then you'd still want to take that exit. You're in great shape. Here was a potential follow through, because you've got lower highs and it's in the direction of fail. So that would have been, you wouldn't have lost money on that one. This big sell-off is the harsh winter that makes the SSC possible. Really nice work. This is Tesla. I found Tesla hard to trade today. In the morning, I got chopped around in here too. But and then the one you missed is the one that pays, which would have turned this positive, but that's good work. Those are shots worth taking. You didn't lose money in here, it just kind of ground out. And the one that got away is the one that hurt. Then nice work on the Aussie dollar. I mean, you took what was available, which wasn't much. You're out of the market, so there really wasn't much room to work. Yeah, the Aussie dollar was kind of in a really tight range all day today. There wasn't much room. You're not over trading. There just wasn't much work there. So with the movers, the ones that were moving, the missed trade made this a scratch day. Otherwise, we'd have been up around 1.6. All right, nice work across the board. Be of good cheer. Keep the faith. Keep working. And we shall see you tomorrow. It's not really a gear, it's something